Hi everyone, hope you're all doing well, and today I'm going to talk about 3 UK stocks for 2022, and these stocks could potentially be undervalued going into 2022 because they have had pretty awful 2021s, and this could be a good buying opportunity to pick these stocks up. Now these stocks I do not own. I wanted to make a video talk about 3 stocks that I don't own. This would have been a really easy video for me to go, okay, let's just add Boohoo onto this list, let's add ASOS onto this list. I'm not going to do that, okay? Even though I think those 2 stocks are fantastic opportunities for 2022 and I own them, I want to talk about 3 stocks I don't talk about too often, and also 3 stocks that I don't own. So we're going to go through this today. Just to let you know, this could be the last video I do for a few days. I might take a couple of days off YouTube, with it being the Christmas period and everything like that. Obviously, I'm probably going to have things to be doing. You guys will probably have things to be doing. So if I don't turn up on Monday, don't get too worried. I'm probably just going to take a little break, mainly because as well as pretty much for the last kind of 2 years, I've been putting at least 5 videos out a week, including at least 2 videos on Patreon. So it would be good to have a little bit of a period not doing 7 videos a week, I guess. So yeah, just to let you know, that might happen. I'll see you when I'm back up making videos. But yeah, we'll take a look at these 3 UK stocks for 2022. Now, if you are on the Patreon, or if you want to treat yourself and join the Patreon over the Christmas period, the link is in the description. There's 2 exclusive videos to go through from this week, which is this live Q&A session, which is just over half an hour long. And there was also another video that we did on the day before, which I won't say what it was, but it's a very good video. The video itself is worth £100 of information on there. So yeah, basically the Patreon for that one video is basically free because of the information on there. So yeah, it's a very good video. So there's 2 exclusive videos to watch over Christmas on the Patreon if you haven't already. To join, that link is in the description. And if you do want to start investing, there's some links to some brokers in the description, like DeGiro, like Free Trade. You join through Free Trade, you get a free share. But let's get stuck onto these 3 UK stocks for 2022. So the first stock is a company called Revolution Beauty. So this is a stock, a lot of these stocks you'll notice have been on a massive dip. This one has been on a big massive dip after the IPO. So it came onto the stock market in 2021, and it's been not a great year for this stock after its IPO. And one of my big favorite things to do is pick up some stocks that have IPO that flop a little bit and you get them at a good valuation. So the prime examples of this would be the likes of Pinterest. That was one that I picked up after its IPO. Revolve was another one after its IPO, and probably one of my best performers, which is InMode. There's plenty of stocks I could talk about that I've done this with, and Revolution Beauty could potentially be one of those stocks. Now, it came onto the stock market, had a pretty decent run after it came onto the stock market, but since then the stock has been downtrending, and especially around September time it has been falling off a cliff and downtrending even more. So overall, from when it came on, it's down 20%, but if we go from the highs, it's actually down 30% right now. And you'll see the company is currently valued at 367 million market cap, and when it IPO'd, which you can see here, when it IPO'd, it was around 495 million. Now, as you can probably guess, this company does a lot of beauty products, mostly online, but it's now been expanding a lot of its presence into actual stores through a lot of partnerships. But yeah, it's obviously started off as a bit of an online play, and also has a stores expansion going on right now. Now, these are some of the products. It is Christmas Eve, so a few of them are starting to enter the Boxing Day sales. So I don't think they're always like this, but they have been. There's a lot of prices being knocked off, as you can see here. But the big thing I wanted to use this for is that the reviews are pretty solid. So I've just searched here. You can see here this, 4.5, 4.5, 5 star, 4 star, 4 star, 4.5 star. So a lot of the products are quite highly rated. So that's really good. And you can see here this is through the online website, and also one of the people that sell their products now, which is Superdrug. And recently they brought out a trading update. The trading update was actually very good as well, which hasn't really done too much to the share price. But the trading update they brought out about a month ago was actually had a lot of positive news in here. And what was in that trading update is that they saw sales do very well, and they are now also plotting to expand into the US, as well as having more and more partnerships in stores. So they did announce some partnerships with Next. I've never actually heard of them guys. River Island and Forever 21 will start selling their products. But it said that in its interim results, the beauty retailer revealed that the group revenue rose 39% to 78.6 million as the business moves into the peak trading period. And the big thing is their expansion in the US has started to move very well. Growth in the US increased by 102% for the 6-month period, with the North American market representing now 26% of their sales. And on the interim results, there's a lot of similar information with expansion into the US. The revenue growth doing very well. The growth all the way around the world growing at a very strong rate at the moment. Gross margins were moving in the right direction as well, and one big thing they're doing is actually starting to move to actually having the product made in-house. So in the next kind of 12 months, you probably expect their margins to increase as they do that as well. And moving on to their past growth, you can see their growth has been pretty fantastic previously, with a lot of profitability in here. They recently have dropped out of profitability. The reason why is because of a lot of the expansion that is happening right now, and there's a few costs to the IPO side of it. So I think they will start getting back to profitability very soon. But you'll see here they did have a bit of a stagnant growth here when the pandemic happened. Obviously people weren't going out, so that meant less people going and buying less makeup products, as well as that obviously the big expansion into the retail chain. Obviously a lot of them had shut down. But going forward, you can see here that there is analysts, and there's only one at the moment covering them, are expecting them to move back into around 10% growth, and also them to step into making more, being more profitable going forward. Financial health wise, the balance sheet has really stepped up, and that's probably because of the funds they obviously raised from the IPO. So you can see here that it's not too bad from that point of view. The debt is quite small now at 4.2 million, and also there's 21 million cash here, so they could potentially just pay off all that debt if they really wanted to. And from an ownership point of view, it is a founder-led company, and the founders also do have a massive holding in the company as well. So Revolution Beauty is currently going through a massive expansion phase worldwide. Obviously the US growth will be something in particular to keep a strong eye on, because that seems to be doing very well going forward, as well as a lot of the new partnerships they're announcing. Sales are being very strong for this company right now. Now you do have to be careful because it is a small market cap UK company. We know they are quite volatile and they can move a fair bit. But since coming onto the stock market, they have started to post some really good financials again, with the world opening back up, obviously retail opening back up. So it looks very promising for the company going forward, and definitely one to keep an eye on, especially with the drop that's happened with the IPO side of it. There's also a few interviews out there with the CEO and founder of the company which are worth listening to. He's a very good speaker, seems to know where he wants to see the company going in the future. And the big thing for me is that looking at this company right now on this bit of a dip, it is very interesting. Now, like I said, analysts, I'm not sure how correct they are, but at the moment analysts are forecasting only to have this company to go back down to 10% revenue growth. Now for me, if this company starts exceeding them expectations, which you could see happening when you look at the growth that's out there, especially with like the US side of it, if this company goes back to doing somewhere between 20 to 30% revenue growth, and it does sneak back up to profitability, this for me at this sort of valuation isn't too bad of a valuation now. So that would be something that I really do consider buying this one. It's one that I'm thinking of. I'm not exactly pulling the trigger just yet on this one myself, just because I want to wait and see their financials and their financials developing. Like I said, if I start seeing this company still putting in 20-30% revenue growth rather than 10% revenue growth, and it does start sneaking back to profitability, for me at these valuations it would be a very interesting buy. So that is number one, which is Revolution Beauty. Number two is the Hut Group, or now they're going by the name of THG. So this is another one that has had a horrible year. This has had an even worse IPO than Revolution Beauty. So I'm not sure why it's not going all the way back, because it's actually been on earlier than this, but the share price has basically just been downtrending for such a long period of time, and then boom, it's just fallen off a cliff within the last kind of 3 months. It's starting to put a little bit of a rebound in right now, but yeah, it's when you look at what it used to be, all the way up at this like £8 range, and now it's down at a £2 range. There's a massive fall off on this here. Now it is a 2.7 billion market cap company, and when they actually IPO'd, the IPO actually at the time, which actually was last year, like I said, there was some, I don't know why, but there's a lot of data missing off Google here, on theirs here. I'm not sure what's actually going on here. I noticed Google Charts has been a little bit slow updating a few things this year. I hope they sort that out because it's normally been quite reliable. But like I said here, it IPO'd, it's 2.7 now. If we look at the IPO, it was a 7 billion IPO. So yeah, it's a massive fall off. And the crazy thing, it was quite a successful IPO at the time, and now it's just recently fallen off a cliff. Now, what's the reason for the fall off the cliff on the share price? Financially, the company has done pretty well. It's had a pretty good, first 12 months or just over 12 months on the stock market. A lot of it goes down to the founder of the company. There's a lot of controversy around the founder and some of the actions he's been taking. There's a lot of reasons. It would be very hard for me to cover them all in this video right now. But one of them was the Capital Markets Day. There's a few things in there that investors did not like, and I did make this video on the Hook group on October the 28th, so probably check that out if you want a bit more information on this one. But I went on a few reasons there. You can see here one of the reasons why here was they basically took an investment giant, SoftBank, which was into a yet to be formed part of the company, basically suggesting that they took an investment and are going to split up a lot of parts of this company up. And that has been pretty much a major catalyst for the drop in the share price. There's been a lot of strange actions here for a company that's now public, where there's not a lot of honesty, I think, and transparency between the founder and shareholders. So, he's basically taken them public, and now he's basically gone, what I plan to do is separate one of the parts of the company off, which is the beauty side of it, which we'll talk about in a second, which is like, well, why are you separating it? Just have to come in on the stock market. And then there's another part of the company here, which they've taken an investment from SoftBank. So Ingenuity here, this looks like that could be separated. So basically, there's a lot of things that have made people unhappy about what the company has done, or the founder is doing, and which is Matthew Moulding, and there's just a lot of not transparency going on. So yeah, that's why the share price is down a huge amount. Now, the company owns quite a few different things. So it owns beauty, which is obviously makeup and everything like that. It owns a lot of brands in beauty, and the other one is nutrition. Once again, it owns a lot of brands in there. On Demand, which is basically a bit like a company where if you want to have a product made, they basically do all that for you. So if you want some like a t-shirt printing, to sell some t-shirts, they supply the t-shirt. You can design it on their website, they will print it off for you, and they will deliver it for you. So yeah, that's basically like a fulfillment center, but they do everything for you. And Ingenuity, which is basically a bit like a Shopify platform, and there's a few big major brands that are using this now. So yeah, there's a lot of diverse income in here. The big one that does really interest me about this company is this one here. This is very interesting. So I would basically be, if I was going to buy this one, that's probably one of the main reasons why I'm buying it. And this is how the from the half year 2021 trading statement happened. There's been a few more out since here. But I wanted to kind of just show like the breakdown of the different incomes of this company. So this is the beauty, nutrition, Ingenuity, and On Demand, and they have other parts as well. So there's like at least 5 income streams from this company, and you'll see here the growth of it has been pretty impressive. 55% here, nutrition 27%, Ingenuity 39%, On Demand 45%, other 27%. So this company's growing at a massive amounts of rate, and every part of the company is a pretty good part here that is being very successful. Now, like I said, the big thing that investors don't like is that the potentially, you invest in this company, but then, beauty gets split up. You'll still own both of them, but it's just like you want to own it under one name and have that diversity rather than having 2 different separate assets. And why now announce it after already coming public? So it looks like that's going to be spun off next year. Ingenuity looks like that could be spun off here, and that's the only thing that people are not really liking right now. But overall, you won't be any worse off. You'll still own them, but yeah, overall at the moment is a pretty good company from that point of view. And if you look at the history of the company, you can see here that it's got a history of a massive amounts of revenue growth. It does really focus on buying out companies to keep expanding that revenue. It has recently dipped out of being profitable. A lot of that is to do with the CV situation, a lot of expansion as well. So I think that will recover in the next few years, so I won't worry about that too much. But the revenue growth is pretty fantastic on the company. If we go on to future growth, there is quite quite a few analysts actually covering this one. You would hope that with a billion-dollar company, so you don't have to worry about being a bit small market cap as much as say Revolution Beauty. But analysts are expecting this to still grow at a pretty decent rate. Hopefully the losses shrink a little bit as this is what they think. But yeah, a pretty decent growth company right here. On the balance sheet, it looks a little bit more solid than what I used to do. Debt to equity is not too bad. They do have 515 million in debt and 878 million cash, so pretty healthy from that point of view. And from an ownership point of view, there is Matthew Moulding, who is the biggest shareholder, who obviously is the CEO and founder, which is pretty good going there. So number 2 is the Hook Group, or THG Group. Yeah, I think this could be a very interesting one. I'll be honest with you, on the whole list that I'm going to be showing you today, this is probably the one that I'm most interested in buying. The reason why is just because it is Revolution Beauty is obviously just beauty, but with the Hook Group or the THG Group, you basically get the beauty side of it, which is growing at a crazy rate, but also there's so many different incomes here from different little services. And ingenuity is probably one of the big things that I'm looking at, because I think that could be a really good driver for revenue going forward as well. And also the share price drop off. You've gone from a company that's valued at 7 billion down to nearly 2 billion-ish right now, and the valuation isn't too bad at the moment. And especially when you consider the growth side of it, the only little thing that you have to consider really is from the management point of view, do you think that a lot of that is priced in now, or are you still unsure about the transparency and being a little bit not transparent to shareholders with some of the actions they're going to take? That's the only thing you've got to kind of consider with that one. But overall, I think it could be a pretty decent beaten down stock to start picking up when it's fallen off this much, I think, in the next kind of 2, 3, 4, 5 years really. So that's number 2. We'll take a look at number 3. Now number 3 might surprise a few people. It is my rival to my DraftKings holding, which is Flutter. So these guys have basically joined in the fall off with a lot of these gambling stocks in the last kind of 2-3 months. A lot of them have fallen off a cliff. Flutter's joined in as well. You can see here that it's fallen down 27%. It actually fell down a lot more than that at one point, 35% down. But it's had a massive pullback, as a lot of these stocks in this industry has. Now it is quite a decent sized company at 20 billion, and it had been on a bit of a very good run, and it has had that recent pullback, which is probably needed. But I think this pullback has created a bit of a buying opportunity in this company. Now this company does own a lot of brands. It owns the likes of Betfair, FanDuel, which is the one that I'm really interested in, Sky Betting, and also they've made a lot of major acquisitions over the last 12 months. So this is one of them that they made recently. We've got another one here. We've got another one here and another one here. There's plenty that I could show you. They have been doing a lot of major acquisitions over the last kind of 12 months. Now, the big reason why I'm interested in these guys is because of this platform, FanDuel. Now, this might end up being split up from Flutter. We'll see what happens. There's a lot of controversy about if they do split up from Flutter. Obviously, you won't be any worse off as a shareholder, just something to kind of consider. I would personally prefer to just hold this platform. But the great thing is that you do get a lot of brands, and also because the other brands are quite profitable, they're actually not burning through that much money. But FanDuel are one of the major leaders in the sports betting in the US. So basically there's these guys and DraftKings, and between them I believe they will hold a good 80% of the market share in the US as it matures. And in the US they are only just allowing a lot of online gaming or gambling, and with it being just allowed, it's an absolute booming market, and this is going to be the major revenue driver for probably Flutter for the next few years. And I think these guys will be very successful, as well as DraftKings. Now Flutter, or FanDuel, basically said that their US business is doing absolutely amazing. They expect to turn a profit for the first time in 2023, and the company generated 902 million in revenue during the first 6 months of financial year 21, up from 159% year over year. So this is just going to grow and grow and grow. And the big thing about this, with the revenue just growing a huge amount, the more this grows and makes up more of Flutter's revenue, this is going to be the major growth driver for why Flutter will still be able to grow double digits. Now the rest of the business is a pretty immature business. You'll see here that if you look at the complete business here, it did 906 million here, 534 million here, 1,439 in its Q3, which is 12% growth. So obviously, you know, when you put all the brands together, obviously there's a lot of brands that are growing a huge amount, but there's also quite a few mature brands in here. But overall, you get a double-digit growth company with this one. You'll see here that their UK and Ireland is actually decreasing at the moment. Australia is doing very well, international is flat, but this is the big driver, the US side of it, 85% growth. So that is doing pretty impressive growth, and that will be the driver for growth. As that carries on increasing, we'll carry on driving the company going forward. And you look before this, the company historically, even without the US side of it, has moved in the right direction, growing that revenue, and it historically has around about 10% margins, and the earnings has, obviously it's been profitable. Obviously it's moved down, that's obviously because of the US driving the side of it and the marketing spend of it, but also a lot of major acquisitions as well. But you can see the driver here of a rebound because of all them has been pretty impressive. Financial health wise, it's not too bad. It's got a decent amount of debt to equity. The only little thing that I'm a little bit concerned about is that it does have 3.3 billion debt and only 643 million cash. So the cash could be a little bit higher than that point of view. It did used to pay a dividend. It has cancelled its dividend. I probably will say it's going to cancel it going forward as it focuses on expansion. But overall, I think this company has a bright future because of its growth with Flutter and expanding into that market. Also on a dip, historically puts in decent amounts of profit as well. And I think, like I said, the revenue driver will be the US side of it, and that will also turn into profit in the next few years as well, and completely lift that company to carry on doing well, basically. And as well, a lot of the major acquisitions they made recently will come into that revenue. Could be a very interesting one to watch. So it's one that I've been thinking about. I have to be very careful because I am quite heavy in this sector already. The thing that I would consider is maybe offloading my 888 holdings and then turn that into Flutter. Could be something that I do think about, or something that I am thinking about. But yeah, those are 3 UK stocks to consider for 2022. If I'm being honest, the Hook Group is the one that is probably at the top of my list at the moment, and the other two in particular are also ones that I am considering. So yeah, we'll see what happens, but I do also have to do a bit more research on them myself as well before I make any of them decisions, as well as a few other stocks on the US side of it. But yeah, hope the video was useful. Hit the like button. If you're new, subscribe. It will be my last video before Christmas, so have a good Christmas. I will see you after Christmas, and yeah, I'll see you all in a bit.